Hi, Michael Petrovich Team Home Loans. So I want to go over just some basics in this series here where I talk about, like in this case, how much money do you need to buy a house? So a lot of people, when they think of how much money do I need, they think of down payment. Now, there's more to the cost of a house than just a down payment. There's closing cost, and a lot of people forget there's also escrow. So this is taxes and insurance. So most people do escrow their tax and insurance, which means they set aside money and have it set aside every month to pay their tax and insurance. So the lender will pay them for you. But they don't realize you also have to set aside a lump sum at close so that when those things come due, there's enough in that escrow account to qualify. And even if you don't escrow, you're still going to end up, paying insurance at close, paying some taxes at close. You'll pay less if you don't escrow your taxes and insurance, but there will still be some escrow at close in addition to that down payment and that closing cost. So first, let's go through the three main loan programs, and I'll go over these in more detail in another video. There's conventional. This is the main one. This is what majority of home buyers use conventional financing. That's Freddie Mac and Fannie Mae. There's FHA, and this is not just FHA is not just a first-time homebuyer program. It's used primarily by first-time homebuyers because it allows for lower credit scores and higher debt ratios, so it fits for a lot of first-time homebuyers. Then there's VA. VA is a veteran, for qualified veterans, qualified active military, a program that's a benefit to the veteran. So it's only available for active military that qualify and veterans that qualify. But as far as cash to close, so conventional, big misconception here, you do not need 20% down. You can get a conventional loan with as little as 3% down. So in some cases, there's a few different 3% down programs on conventional. Whether you're a first-time home buyer, whether you're maybe a moderate income buyer, you can fit into that 3% down program. If you don't fit into that, if you're either a first-time home buyer or having an income within their guidelines, we're going to require 5% down. And then, closing costs, escrow on top of that. These are things that you will also pay, which can be, end up being 4% or more, 4 to 5% of the purchase price or as well. So it's a big number that a lot of people don't factor in, especially that escrow. The seller can cover some of these. If you're in a market where the seller is giving away seller credits, a seller can give you a set number of credits. That's on all three programs, VA, FHA, and conventional. You can get credits from the seller. You just got to work those into your negotiations and your contract. FHA requires 3.5% down. You can also ask, very similar escrow and closing costs. You can also ask for credits from the seller if needed. VA is a zero down program. So they allow you to get a house with no down payment. There is still closing costs. There is still escrow. The seller can pay those as well. It is possible on the VA at least to get into a house with no money out of pocket. You can get 100% financing and have the seller cover the cost and your escrow. The other two programs will require at least that 3 to 5% down payment or that 3.5% down payment, whether you're going conventional or FHA. The seller cannot pay those for you. There are ways to get those, say, from a gift, from a relative or someone close to you. It doesn't necessarily have to be a relative, but someone that's willing to gift you. It's usually a relative. So to keep in mind, the main thing about this video I want everyone to keep in mind is that you don't need 20% down. Most people don't put 20% down, but there are costs beyond the down payment. A lot of first-time homebuyers forget that it's not just that 3 to 5% down payment. There's also closing costs. There's also escrow that you have to factor in. If the seller's not willing to pay those, that can more than double what you think you're bringing to close. So this is another reason why you want to get pre-approved early, so you can see exactly what you need for cash to close, and so you can know when you go out shopping, do you need to ask the seller for credits at close to help offset some of that cash to close on your end. All right, that's it. Have a great day. I'll see you.